Australia is in the midst of a housing boom.
What can I say? Picturesque perfection from sunrise to sunset. It certainly does tick absolutely all of the boxes.
Prices have been rising in every capital city.
The lower end of the market has been outperforming for the better part of 2 years.
The shortage of stock is what's driving prices right now.
We're not building enough properties for people to be moving into.
Buyers have been helped by 3 interest rate cuts and the expanded First Home Guarantee Scheme.
What that's likely to do is add demand into a red-hot property market.
Now the Reserve Bank's threatening interest rate hikes. The 2 biggest markets have hit affordability constraints.
Definitely there's been a lot more selling prior this year.
The banking regulator's clamping down on overstretched buyers, and it's taking more than a decade to save a 20% deposit.
Incomes just aren't growing as much as property prices, and that's where your buyer pool starts to thin out.
Forcing some to stay longer in the family home or rent somewhere else.
I think in one word, it's very challenging. The vacancy rate is under 1%.
It's still very much a landlord's market.
We look at where the property market is going in the next 12 months.
There is nothing to do. You can literally walk on in.
In one of Australia's more affordable cities,
Folks, the location is absolutely prime.
the contest for properties is on.
Competition in the auction arena well and truly ignited now.
This 3-bedroom home in Melbourne draws a big crowd, including first home buyers.
We've been to a few auctions now and there's so many people bidding and a lot of investors. So yeah, we know that there's a lot of competition.
We're selling, and we're sold.
The house sold for more than $1.1 million. In the 3 months to the end of November, the fastest price growth has been seen in mid-range homes.
With the interest rates, first home buyers are really keen to enter the market with some new schemes and that sort of thing. And investors are definitely looking to buy in Melbourne.
In the top end, prices have risen 17% in a year. This homeowner has been looking to buy her next home for almost 12 months. She wants to downsize but upgrade to a newer property than the one she owns.
It's jumped out of my price range very quickly. Within middle of the year, it was just taking off. So I had to really readjust my expectations.
The agent says higher rents are driving the property boom.
We initially had a flood of interstate investors for the last 12 months. They were snapping up the lower price properties between sort of the 400 to 600 range. Those properties now are in the 600 to 700 range. So the rents really delivered for these investors.
On the East Coast, properties in Brisbane have also seen strong price gains. Interest is high in this 3-bedroom home.
We are sold at $1,470,000. Congratulations.
It's a great price for the owner. I think he should be very impressed with that.
Whether it's a combination of lack of stock, spring, interest rate cuts, or all of the above, it's hard to know, but I can tell you the market is responding well.
Across the country, the market is also responding well on the West Coast. In Perth, the number of properties available to buy remains more than 40% below the average.
Double door pantry. It is definitely the most crazy market that I've ever seen. There's so much demand for people wanting to purchase properties, very, very limited stock, and so competition is high, which is obviously driving the price.
Agent Natalie Hatton expects prices to remain elevated in 2026.
There's so many people looking to buy. There's no rentals, so they're trying to take advantage, if they're a first home buyer, of the first home buyer scheme.
Nationally, prices have risen 7.5% in a year. The median home value is now more than $880,000. Darwin led the gains, followed by Perth, Brisbane, the regions, Adelaide, Sydney, Hobart, Canberra and Melbourne. It's more expensive to buy a property in Sydney than anywhere else. Next up are homes in Brisbane and Perth, while properties in Hobart and Darwin are the most affordable.
2025 was the year of revival in Australia's housing market. We started to see a slowdown, but that all ended when we saw 3 rate cuts over the course of the year. 2026 could be the new year of a subdued property market because we're not getting the same rate relief and affordability constraints are in play.
In Sydney, property prices accelerated after the interest rate cuts.
Strong competitive bidding, but not another one like it. I dare you to try and find it.
But with talk of rate hikes, growth is slowing and buyers are hesitant. This Victorian home with panoramic views of the city was eventually snapped up for just over $3.5 million.
3, 5 and 60 going, sold. Well done to you, sir. Congratulations.
This property sold above the reserve. I'm off to have a quick chat with the auctioneer. Tim Snell, nice to meet you.
Nice to meet you.
Tim, what are you seeing when it comes to the auction environment in Sydney at the moment?
Yeah, certainly since the changes in interest rates and what's been going on with the economics of Australia, things have slowed down a little bit, but it's becoming a more balanced marketplace. So whilst the price expectations might not be going up as much for the next year, it means there's good opportunities for both buyers and sellers.
But will they be willing to take the plunge?
I think it's going to be a pretty stable, stagnant market for a while.
Do you think in 2026 vendors are going to have to adjust their price expectations a little?
For some, yes, for some. I think all it takes is one good result and vendors' expectations go up overnight. But there is also a lot of evidence and things happening in the market that keeps some owners a bit more level-headed as well.
Hey Alicia, how you going? Nice to see you.
Nice to see you. This looks great. Should we go and have a look?
Yeah, absolutely. Can't wait.
To get a bigger overview of how the market's performing, I met up with Cotality's Eliza Owen at the property in Sydney's Inner West, but we couldn't help having a sneaky look around first.
I love how... Oh, and you can see the fish market? Yeah.
Eliza, we've seen big gains in the property market really since the RBA started cutting rates back in February, but are buyers in big markets, particularly Sydney, starting to hit up against affordability constraints?
I think so. I think when you look at the more expensive end of the Sydney market, that's pretty much flattened over the past 3 months. And again, with a city like Sydney with a median dwelling value of nearly 1.3 million across all houses and units, you're starting to see a fall in the clearance rates. Monthly growth is getting towards 0, so flat. And we're starting to see, I think, expectations shift given the change in interest rate settings for 2026. Incomes just aren't growing as much as property prices, and that's where your buyer pool starts to thin out.
How is that segment of the market being impacted by the government's widened first home buyer guarantee scheme?
Well, you'd have to imagine there would be a flurry of activity in response to it. Like we've seen with big first home buyer schemes in the past, it creates a short-term boost to first home buyer numbers before that additional access to credit gets absorbed into the market and things just reset back to how they were. So I think a short-term flurry of first home buyer activity, but it's not going to last. And even people who are utilising the scheme are going to find they're getting less and less with their money because at the end of the day, it's a demand-side scheme.
Yeah, and as you say, the RBA has signalled cuts are essentially off the table. If anything, the rates will be on hold or potentially a hike in 2026. What's that going to do?
Well, access to credit is one of the main things that determines the trajectory of the property market. So with interest rates on hold and affordability constraints still quite high, you'd have to imagine that this is going to create at least softer growth for the national market in 2026, and for more expensive markets, a bit of a dip early in the year.
When it comes to APRA's action to curb risky lending, is it going to be effective, and what could come next if it's really targeting investors?
I think that the limiting of high debt to income lending, which is a little more prominent among investors with lots and lots of properties, it's a good guardrail to have. It's very preventative. It's not going to have a lot of impact on the market in the short term. They're limiting the portion of high debt to income lending at 20% for investors and owner occupiers. Across the whole market, it's only about 5.5% of new originations. But other things they might keep looking out for is a bit of a rise in interest only lending products, again, a popular investment product, and also just the growth of investment lending full stop. I mean, in the 2010s, they literally put a speed limit on how much you could grow investor lending. They put another limit on interest only lending in the 2010s. So I don't see why we shouldn't expect them to act twice in the 2020s if things continue the way they have recently.
Population growth has been growing pretty fast. Are we seeing supply now starting to match that, or can we see a point where it will?
We're definitely not seeing supply match that. So between migration and additional households through people moving out of home or getting divorced, we've seen over 200,000 households added to the population across Australia. Compare that with about 175,000 completions. If the current level of projected population growth comes to fruition and construction levels remain just as they are now, I don't see that getting back into balance until 2029. So really, we need to see a continued focus on productivity and delivery of supply, but also just thinking about what else we can do to curb demand. And funnily enough, some of the regulatory restrictions on investors might do just that.
Eliza, thank you.
Thank you.
For those who don't already own their home, finding a place to rent is getting more expensive. And it's set to get worse, with Domain predicting rents will hit record levels by the end of 2026, and the number of available properties remains low. I'm off to meet Domain's Nicola Powell to find out more. Hi Nicola, nice to see you.
Nice
Should
to
we
see
go
you.
inside?
Let's go.
Hi Nick, how are you?
Welcome.
Thank you so much for having us.
Nice to see you.
Good. Thank you.
Amazing views.
It certainly is. Absolutely.
This one-bedroom apartment in the heart of Sydney is going for more than $900 a week, and the real estate agent says properties like this are rented out within 2 weeks.
It's still a very tight market. Although there's been signs of lowering of rents, we're still seeing vacancy rates under 1%.
Across Australia, rents are up 5% in a year. Prices are rising the most in Darwin, Hobart and Brisbane. Just 1.9% of properties nationally are available to rent. And Sydney is the most expensive, followed by Perth and Brisbane.
When we look at the rental market over the last 5 years, there has been so many pressure points into the rental market. We've seen strong rates of population growth, we've seen a lack of supply, and what we have seen is very tight vacancy rates overall. Those conditions are slowly starting to change, but that isn't going to change overnight. It is going to be something that happens over time. We're still forecasting rental growth for next year, but certainly not to the extent that we've seen in recent years.
Nicola, since COVID, the amount of money people need to have to rent has grown significantly.
It has seen a significant increase. When we look at where rents were 5 years ago relative to today, we've seen roughly about a 50% increase in asking rents. And that's pretty unanimous across all our major capital cities. Some cities have seen even greater rates of rental growth, like Perth, for example, where we've seen increases of between 70 to 80% over a 5-year period. When you compare that to the average income and the growth in average income, that's only increased by about 17 to 18% over that 5-year period. So there is a vast difference between the growth in asking rents and the growth in wages.
And how do you think that will be arrested? Will supply be the answer? We see apartment buildings popping up across the capital cities. Is that going to be enough?
We know that it's not a one quick fix solution. I think it needs to be a multitude of answers to really fix Australia's housing crisis, and rents do factor into that. I think it's things like build to rent. It's also first home buyer incentives to help people transition from being a tenant to being a homeowner, because we know that the high purchase prices lock people into the rental market for longer. But also supply is really the key. We know that we haven't built enough homes as a nation. That has been something that has been years in the making, so it's been escalating over time. And I think supply is definitely one of those solutions, but it's not the only solution.
Nicola Powell, thank you so much.
Thank you.
And that's all from this special on housing. The business returns on the 2nd of February. For more on our stories, you can go to the ABC News website or catch up on iView. I'm Alicia Barry. Thanks for watching.